Proceed with caution is the theme of today's video. We are experiencing some headwinds to the real estate market and the overall economy that are slowing things up a bit. Let's get to it. Hi, Jessica Genung here from the Genung team in Active Realty. Today we are going to be giving a market update and we are going to be taking a little bit more of a cautionary tone with my recommendations than typical. We are seeing some slowing just over the past few weeks, and it's important for those of you that are looking to buy or sell in our real estate market to be informed about what's happening, and so therefore you can make a better educated decision for you and your family. If you haven't been living under a rock lately, you are likely aware that we are facing a lot of economic turbulence. As of the making of this video, the stock market is on quite the bear run, with the S&P down over 13% this year. GDP decreased at an annual rate of 1.4% in the first quarter of this year, and the inflation rate is now at about 8.5%. A recession is generally defined as 2 successive quarters of negative GDP growth. So we are about halfway there, but we are certainly not guaranteed a recession. There's also concerns that intense labor demand could spark further wage increases, and this has investors worried that the Fed will not be able to curb inflation, hence the stock market dropping recently. The Fed raised policy rates 0.5% last week. This move will increase short-term rates like car loans, some home equity loans, and credit card rates. It is important to note that the Fed rate increase does not directly increase mortgage rates though, but it does have an impact on them. Mortgage rates, they have already moved higher in anticipation of the Fed's actions. So in other words, this week's rate hike is pretty much already priced in. I don't know if you've seen my video, it was published, I don't know, maybe a month or two ago on lender challenges, but that is still our biggest challenge in this market. So as the rates go up, finding a low rate is becoming increasingly important to our clients, but just make sure that if you're being promised a good interest rate, that the sacrifice is not going to be you're going to receive bad service or they're not going to be able to close on time, because that's often what happens. Like when people are choosing these credit unions or these larger banks, the service can be terrible. So if you need a recommendation for a lender, ask your realtor. If I'm your realtor, ask myself, and I'm happy to give you a lender with great rates and great service. I personally am not convinced that the Fed is going to be able to orchestrate this soft landing, just like I wasn't convinced that the rise in inflation was just transitory. There is a lot of chatter out there on the internet about a real estate crash. Let's go back to my video that I posted almost a year ago that was titled, "When Will the Market Crash?" It was basically a video about all of the reasons the housing market is not going to crash. I won't get into those reasons, but if you're interested to go back and watch, I'm gonna link that video down below in the description. At that time, I was very convinced that the market was not going to be dipping. And sure enough, over the past year, the market continued to make huge gains. But with that being said, I also mentioned in that video, I will let you know if I see things changing. Now we have a different story. We have very rapidly rising interest rates, which have increased over 2% in just a few short months. The cost of so many things is rising with inflation. The war in Ukraine is causing all sorts of problems, and we are still facing supply chain challenges due to COVID. The interest rate hikes are likely to cool the real estate market, and we are already feeling that in our business over the past few weeks. The good news is that the crazy bidding wars with homes getting like 10 to 15 offers really seems to be subsiding. We are getting contingent offers accepted lately with less difficulty, and we're up against fewer offers on the buy side. Prices are still increasing for the most part in our area. It kind of feels like that we're flattening out a bit. This is what we hope and expect for our buyer clients. On the seller side, this may be the peak. My photographer last week gave me some interesting insight. He has been very busy still, and he says that a lot of the listings that he's taking photos for right now are investor-owned rentals that they've decided to sell. This makes sense to me because we know that it's a great time to sell, and investors are not in as tough a situation as owner-occupied people are that are like considering selling their current home, but then they're going to need to buy another home with likely higher interest rates and at today's higher prices. Now more than ever is no time to speculate in this market. Your personal financial situation and income security are very important to evaluate. We still have a very extreme housing shortage and prices are likely to climb just at a slower pace, in my opinion. It is typically a much better financial decision to purchase a home rather than rent. So if your job is secure, your income is secure, it's still a great time to buy, especially if you are going to be in that house for the relative long term. If you're going to buy a house in 2 years and you think your job might be transferring you, that could be risky in today's environment. On a positive note, the good news for buyers is that this is an opportunity to get into a home relatively quickly and easier than it has been in a very long time, since we're seeing a lot less buyer competition, a lot less offers. The main problem is that it is going to be at a higher interest rate than we've been over the past couple years. So hope this helps give you some information about what's going on in the market, and I will see you next week. Bye.